My name's Stephen Shaw. Thanks for watching. Today, in this video, I'm going to talk about IRMAA, Income-Related Monthly Adjustment Amount. I'm going to answer the question, what is IRMAA, and who does it affect, and what can you do about it? Now, this is probably one of those things that for some people, or for a lot of people, you may not have to watch very long because it doesn't apply to most people on Medicare. And if you're not on Medicare and don't plan on being on Medicare, you shouldn't be watching this at all, because this is all about a Medicare premium. So let's start with the very basics of the Medicare Part A. Does not have a monthly premium, so we're not talking about that. Medicare Part B has a standard monthly premium for most people, which in 2021 is $148.50 a month per person, of course. All these prices are always per person. So that is what most people cover, but believe it or not, that is not the true cost of Part B. The true cost of Part B, I'm not even sure, but it's much higher. It's just being greatly subsidized by the federal government. Most people only pay a small portion of what the actual cost is. However, the law says, and the government says, that higher income earners are going to pay a bigger share of the actual cost. So, how do they determine who's going to pay what bigger share? Well, that's determined by your modified adjusted gross income from 2 years ago, and it applies to Part B and D. And so it just makes the premiums go up higher. All right, so how do we know all this and what are the details? So here's what I want to start with. I recommend that you rely on the Medicare.gov website to give the most recent numbers and the values that we need to be talking about, because they will adjust over time. So here's what you do. Do a search for IRMAA, I-R-M-A-A, space 2021, all right? You'll find some advertisements from some other companies, but I always scroll down to find the Medicare.gov site, and that'll bring you to Medicare costs page, and it will kind of break down into what those costs are. And here's where it gets to the point that today's relevance. Basically says most people will pay the standard Part B premium, $148.50. But there are people that will pay higher than that, and then it will scroll down and you'll see a chart. So the chart is based on what's called modified adjusted gross income. Most of us are familiar with AGI, or adjusted gross income, but the government has to make it a little bit more complicated, so they modify that, and basically they include certain other income to determine this threshold here. So here's what that looks like. For single filers, so people that file a single return, if your income is less than $88,000 a year, then you don't have to worry about, there is no adjustment. You're going to just pay the standard rate. If you file taxes jointly, married file jointly, and your income is below 176,000, then you too can pretty much move on to the next video in the list here, because IRMAA is not really going to be relevant to you. But if your income is higher than those thresholds, then there's a few different levels that are going to adjust the different premiums. So let me give you an example. The highest level there is, single filers earning $500,000 or more, or married couples filing jointly earning $750,000 or more, have to pay $504.90 a month per person for their Part B. So let me say it this way. The same Part B benefits that the person paying $148.50, the standard rate, those higher earners get to pay $504.90 this year per month, of course. All right, so what's all that's about? Well, what it is it's just basically under the philosophy that says higher income earners need less subsidies and they can pay more of the cost of Part B. So and then there's several different tiers along the way. So if you say, well, my income's not that high, I'm a married couple, our income is not over $750,000, but it is over $176,000, well, what do I pay? Well, that's why I want you to look at the chart, because I don't want to go through all the details here on this video. But if you find the chart, somewhere in there you'll see what income range is and what your premiums are. So that affects your Part B, but it also affects your drug coverage. If you have Part D, your prescription drug coverage, whether that's a part of a Medicare Advantage plan or if it's a standalone plan, either way, the surcharge is on top of whatever Part D premium you would normally pay. So you can see here, if you're a higher income earner, quite frankly, this is like a tax. It's just not called a tax. It's just a higher cost of Part B and Part D. And that's what that is. So that stands for income-related monthly adjustment amount per person. All right, so what can you do about it? Well, there may be nothing you can do about it. If your current income is in those ranges where the adjustment is taking place, then you have to pay that higher cost if you keep Part B and Part D. That may influence your decision if you have other options to cover drugs or other options to cover your medical coverage, such as a group plan through an employer or through a spousal employer. That may influence your decision on whether you join Medicare Part B or Part D. You may stick with your group plan because of the cost analysis there. But if Medicare is your only health insurance option, and you are going to stay in that high income, then you're just going to pay a higher share. It's not a matter of whether that's really fair or not. Of course, we tend to think of it in those terms, but it is what it is, and the reality is most people are getting these costs subsidized. We just don't think of it that way most of the time. So what's going on there is, if you're a higher income earner, I know I already said this, but it just means that you are paying a higher share or getting less subsidized premiums. So what can you do about it, though, if that is not your current income? Remember, the rule is that they're basing this based on modified adjusted gross income from 2 years ago. So what's the deal with that? Why 2 years ago? Well, here's my understanding of it. We're in the middle of July, and there are many people who have not yet filed their 2020 taxes. They are automatically granted an extension if they apply for an extension to delay their tax filings till October 15th. And there's a lot of people, and maybe you're this way, where you ritually or habitually, annually, just delay your filing till October 15th. And there's a lot of reasons why people do that. But for whatever reason, there's enough people that do that where the government does not feel confident that they can base this IRMAA on last year's taxes, because many people haven't even filed yet. So they don't know that income level. So that's why they go back another year, because certainly by now people have filed their 2019 taxes. And so that's a reliable, or this is what they feel, the government feels like that's a reliable standard of income to use, is what did you make 2 years ago. So the issue becomes this. My clients come in, and I bumped my microphone, so my clients come in and they say, well, Stephen, I was making X amount of money that put me into the IRMAA category 2 years ago, but since then I've retired. Or since then something else has changed and I'm no longer making that same level of income. What can I do about it? When does it get adjusted? Does it ever get adjusted? Is this going to be the premium forever? And the answer is, no, it's not going to be forever unless your income is that high ongoingly. And that's a good problem to have if that's you. Okay? But if your income is not that high, you certainly don't want to be paying surcharges and higher premiums unnecessarily. So the government recognizes that that happens a lot. So here's what they put the burden on. They basically tell you, you have to communicate to us. We only know what we know, which is what you filed as income in 2019. If your life events have changed, we don't know that. So you got to tell us that. There's a form. It's a Social Security form that's The form number is SSA-44. But if you wanted to Google it, you could just simply put in the search bar for IRMAA appeals form or life-changing event form for IRMAA. Because that's the name of the form at the top, says Medicare income-related monthly adjustment amount life-changing event. So you fill out that form, it's pretty simple, and you just declare this is what the life event was. I got divorced, or my spouse died, or I stopped working, or I reduced work, or there's several things there that you could choose from. And then you put in what your estimated income is currently, and then you file it with your local Social Security office, and they process it, and then they make that adjustment if it's appropriate. So that's what you can do about it. If you don't believe that IRMAA should apply to you because today's reality is different than what it was 2 years ago from your income point of view, then there is a way around that. My understanding is that after you appeal, if they accept the appeal, they will retroactively either refund you or adjust the amount going forward so that it's not money that is, quote, wasted or lost or overspent. So that's the good thing. There is a safety net or a safety valve there to give people that have an adjustment to their life and their income a way to compensate for that IRMAA. So that's today's video. We appreciate you tuning in. I don't expect this to answer all of your questions, so please call me. Call our office at Strategic Estate Planning Services. Our office is 1-800-381-8870, and you can ask for me, Stephen, or Morgan. We'll be happy to talk through what you can do, and if you can't find the form, we'll be happy to email it to you. But I think all of the resources you need are found on the Medicare website. We're just trying to unpack it and make it a little bit more digestible to you. So God bless you. Have a good day. On our channel, we have more than just Medicare videos. We also have a playlist, Strategic Money Tips. They cover other areas that are very practical. We try to keep them very brief. Go to our YouTube channel, subscribe. But if we could serve you directly, please call our office, 1-800-381-8870. and visit us on our website at strategic-estate-planning.com.